Hello and welcome to this very special edition of Indianomics. The Indian economy and equities are possibly at an inflection point. While GDP growth is almost touching 8% this year, at least the first 3 quarters have, the equity markets have been notching fresh highs with some regularity this year. The rupee is a picture of stunning stability, and Indian bonds have already rallied 5% this year and look set for a big year ahead, what with inclusion in not just the JPM index, but also in the Bloomberg index. In addition, there is an important election round the corner, which promises to usher in another term of stable politics and policy making. It's a great time to have an investor conference, and that's exactly what the Citi India team has been busy with. Their investor conference comes up on the following Monday and Tuesday. Joining me to speak about the conference and their view on India's markets and macros are Aditya Bagree, the head of markets at Citi India, and Surendra Goyal, the head of equities at Citi. Gentlemen, thank you very much for your time at what should be a very busy last working day before your conference begins next week. So thank you for sparing your time.
Thank you for having us here.
Sure. Well, Aditya, for starters, I mean, I'm excited by the fact that now 2 indexes include us. What's your view actually on yields itself? It looks like everything is going for a bond investor.
I think very true. To be fair, Latha, I think we are very constructive on Indian bond yields. I think starting from the fiscal deficit number as well as the gross borrowing that was announced by the FM, I think it took the market by surprise, and we did see the market react to it, right? We were trading around 715, 720 in the 10-year IGBs. Now we are closer to 705. I think the 14.1 lakh crore of gross issuance can easily be absorbed by the market. Plus, at the back of all these bond index inclusion, we are expecting just from a passive flow almost $25 billion to come in, right? And if you include the active flows, maybe closer to $30 to $35 billion. So we think that bond yields, just given by the demand supply dynamics, can go down to maybe 680. And if towards 680,
okay,
right? In fact, we think if if RBI starts cutting rates or gives an inclination that rate cutting is on the horizon, I think it can go down even further to maybe 6.5.
Okay. Well, we had a report from Samiran, and he was on the channel. He's not expecting it till, I think, October. So, I mean, there is some time. But nevertheless, 680 is mouth-watering for anyone looking for CapEx, plans. But that's the point, Surendra. Are you seeing enough CapEx plans? When you approach the equity market, would you pick CapEx candidates?
Yeah. So, yes, we do like that sector. The only thing we would add here is that the recovery is gradual. Okay, it's a slow, gradual recovery, but all the preconditions for CapEx that are required, they have all been in place, right? COVID kind of pushed out things a little bit because capacity utilization across industries went down. But now we are kind of back up there. So definitely feels like a much better place to be in. Like, what are all the usual preconditions that are required? They're all in place. Capacity utilization across the system has been increasing. The only thing we need to keep in mind that it's unlike the previous cycle, which is what people always end up comparing it with, right? Where we had like 4 or 5 very high years of growth.
Of infra growth.
Infra growth. So I think it will be a lot slower and moderate, but I think everything is moving in the right direction. But and some of these businesses, like more as stocks, they have gone through a fairly prolonged slowdown. So as they come out, the growth is also accompanied by operating leverage, which from an earnings perspective is translating quite nicely for investors. And that is where we continue to like the sector.
Okay. So what would you pick? I mean, would you pick stocks like L&T? I don't know if you're allowed to name names, but is it that kind of stocks? The PSU utilities are doing very well. Which is your, where would you train the viewer's eye?
Yeah. So we actually like both the segments of the market. If you look at our reports for the sectors where we have overweight stance, both of these sectors figure. Okay.
And it's CapEx and
as well as PSU utilities. And I think it's a combination of multiple things. I think it's where valuations are in context of the broader market, the kind of growth outlook, right? I think when you put it all together, these sectors still compare quite favorably. And some of these sectors like PSU utilities, for example, also benefit from the fact that for multi-years, the level of interest in these sectors has been low. So they started with a fairly high level of under ownership. And as people kind of kept bridging that under ownership, the stocks have really done very well.
So, it's a big fear of small caps. Would you worry about which kind of PSU utilities you're picking up?
No, absolutely. Which is why I mentioned the point that we are selective. We would be careful because definitely in certain pockets in the small cap and micro cap space, you feel that there is a lot of optimism getting priced in. Okay. And I think to that extent, one needs to be cautious here. If you look at the kind of flows that we have seen in SMIDs in the last 14 months or so, they have been very strong, right? Yes. So definitely there are pockets where we feel there is too much optimism. The fact is that SMIDs have also delivered better earnings. Okay. So to some extent it's justified, but there are pockets of exuberance which we would be careful about.
Okay. Well, Aditya, tell me about the cost of capital for corporates. If the Indian government is going to borrow as low as 6.8, do you see a rush of corporate bonds? Will that market become active again?
So I actually think even currently, right, if you look at the corporate bond spreads, they're quite tight. The 10-year PSUs are trading at almost 40 basis point spread to Government of India bonds. So at 705, PSU bonds trade at around 725, right? Even NBFC's name are trading at around 750 to 760. So the corporate bond spreads have stayed tight after COVID, right? When there's a rush of liquidity in the system. I do think
as you get to 6.8,
right,
then you're going to have even more attractive yields for.
Absolutely. I think from a spread perspective, maybe you will see some widening because all this inflow that is going to come and the demand dynamics which is going to be there is going from Government of India bonds, right? Having said that, I mean, corporate bonds are also going to benefit. There will be a crowding in, right, of investment in corporate bonds because a lot of the supply will be taken over by foreign investors. And so from a local investor's perspective, they'll be able to deploy that in corporate bonds. So I do expect corporate bond yields to also come down, maybe not as much as Government of India bonds, but definitely yes.
Okay. What about the rupee? If you're going to have $40 billion, counting active and passive and Bloomberg and JPM, right. Do we see some? I mean, we have seen, which is a usual scene in the Jan-Feb-March quarter. At least we are starting to see 82 point something. Right. But does it get any stronger?
So again, very constructive on rupee side. We don't know if there will be a lot of appreciation, right? We actually think that from a balance of payment perspective, maybe we will see about $45 to $50 billion of surplus for India next year. Having said that, we think RBI might look at adding back to the reserves, right? Keep growing it. So you might not see a big appreciation in rupee, but it might just trade within this range.
Okay. Well, actually, I've forgotten about your conference. Surendra, what can you tell us about the conference in terms of its attractiveness? Are you seeing a fresh batch of FPIs or funds, sovereign wealth funds interested? What's the audience like? Or what's the interest like?
Absolutely. So we are seeing very high interest. And I'll maybe share two things. Firstly, about the conference. We have around 200 clients registered for the conference, out of which 80 are investors from overseas. Oh. That kind of tells you about the interest. And the second thing I would mention is that we, even like when I was in the US, say a couple of weeks back, we are seeing a lot of interest from international funds. And when I say international, what I mean is world ex-US. Okay, and in this benchmark, India is now 5% of their benchmark, which say 3-4 years back used to be 2 percentage points. And in the same small cap benchmark, India is now 8% of the benchmark. And these are investors who may not have spent a lot of time on India in the past because the exposure or the percentage was relatively small. So we are seeing a lot of interest in India, and which is kind of reflected in the conference as well. The number of investors, the kind of investors. The other thing I can tell you is we are getting a lot of people who are either looking at India for the first time or kind of were looking at some other EM or Asian countries mainly. And now because India is becoming more important, they are also spending a lot of time in India. So I think it's a combination of all those things.
Okay. Aditya, you want to add anything in terms of specific themes that you all may be exploring in the conference?
So, just to add to what Surendra said, right? I mean, last year we actually did these road shows all over the world, talking to both investor clients as well as corporate clients and talking about the whole India opportunity. I don't
How
think
is it different then?
so. I don't think I have seen this level of interest in India in last 20 years that we saw this year or last year, right? Partly, I think it's just because how strong the macro fundamentals are in India. Partly because everyone is looking at China plus one strategy, they're looking at diversifying out of China, and India is one big strong market that they're able to see. Just one more thing I do want to add, says Surendra, and you brought up the conference. We are also expecting Jane Fraser, our global CEO, to attend this conference. So yeah, that just shows interest that we have not only from
And the
banks
importance
and
given
non-importance.
to
Exactly.
the India equity story and the India economy story. Well, we have to take a break on that note, but I do want your views on a whole host of other sectors, Surendra, and you on what you make of what's happening in the global ecosystem and whether that might spoil our bond picture. All those questions after the break.